Welcome to this trade idea on how I validate trade ideas with seasonal charts. Now, before we dive into how I validate trades using seasonality, and I'm going to be using silver as my example here today, let me quickly explain to you how to read this Seasonax chart, because this is really important. First, look at the X, the horizontal axis along the bottom. This horizontal axis simply shows the calendar year running from January on the left-hand side of the screen through to December on the right-hand side of the screen. Now, it's not showing specific years. Instead, Seasonax compresses the last 5, 10, in this case, last 15 years, it's whatever period you select, into a single average year, right? So what this timeline represents is the typical behavior of the market throughout the year, right? Over these last 15 years. Now, look at the y-axis or the vertical axis over here on the left-hand side of the screen. Now, what Seasonax does is it always normalizes the starting point of the data to 100 on the 1st of January. So remember, this doesn't show the actual price of the instrument. It shows an indexed performance path. And it's effectively the average percentage movement across the selected period. So let me explain what I mean. So if the line, right, you can see here is up at 103, that means that the market has typically been up around 3% from the start of the year at that point in time. So typically silver is up 3% at the end of January from the beginning of January. If it's down at 99, as you can see here, that means the market has typically been 1% lower relative to the start of the year. Now, this indexing method removes distortions that's caused by different price levels in different years. It just lets you see the pure seasonal pattern, and it's the underlying behavioral tendency of the market without any noise from, volatility or long-term price trends. It's very, very helpful. So when you're looking at these seasonal charts, remember the x-axis along the bottom is the time of year. The y-axis, the vertical one, is the indexed average path. And together they show you how this market typically behaves throughout the year based on historical data. Now that you understand that, let's look at the actual seasonal window and what it means for traders. So first of all, let's look at the average return by weekday. We can see here that Monday tends to be the strongest day of the week for silver. We can also quickly see that July and August and January are the strongest months of the year. Now, if we look here, we can also see these in more detail. If you look from January to the end of Feb, look at that, 73% winning trade percentage. We can get into more detail here. Look at the end of June into the start of September, an average return of 7.78%. So we can start to see the strength of the trend in these two periods of positive seasonality. And that gives us those two windows, which shows us, okay, this is really, really interesting. Now, what we can also do is we can start to look at the data for the trade idea that we have specifically. Now, in this instance, right, I want to look at silver trade. Now, this is a silver trade based on my own trading that I took around the spring of this year. Now, very briefly, the macro condition for silver was fantastic. We had the gold-silver ratio, which is the price of silver relative to gold, up over 100. Now, whenever the gold-silver ratio is up over 100, for me, that's a clear indicator to buy silver. It means that silver's cheap relative to gold and was likely to benefit from the bull run we've seen in gold, but this is going to be catching up. So that was a great trade. I knew it. And the last time I took this trade was in 2020, And you can see here the gold silver ratio, look, was over 120. It just wasn't possible to buy enough silver. And look at that great run, right? And that lovely weekly move, huge push up, right? Now, on top of that, I then had a price action trigger. You could see that price was clearly trending higher. Price was above its 50, 100, and 200 exponential moving average. You can see that, and then we had this lovely bullish piercing line pattern, and a very unusual pattern to see in commodities like silver. More often you see the bullish piercing line in stocks. You can see here you had a gap lower on the open on this Monday, the 7th of April week, and then price closed for that week above the 50% retracement of this previous candle. That's called a bullish piercing line pattern. Great reversal pattern. That for me was the opportunity to go long. Now, this is where seasonality helped me manage the trade and look at reasonable stops. So I was looking at this, and what I wanted to look at was, okay, here I am, March time, and I know that I've got a strong window ahead in the short term, average return positive of 3.31%. I've got another strong window here, 7.67%. Now I've got a little dip here lower with an average return negative 4.16%. But given the macro conditions, what I wanted to see was what is the seasonality over the last 15 years for that whole period. And what I saw was that the average return for the whole period was 6.53%. But what I was interested in was not the winning years or how much you could gain, but I wanted to see how much was the maximum that silver went down and still posted a gain. So I had a look here, the maximum drop. And you can see here, 19.46%, but it's a losing pattern. 36 losing pattern, 12 losing pattern, 5 winning. And you can see here, this is the one I'm looking. It fell a maximum of 17% when it was still a strong year in March 2025. Well, that was actually this year. So let's have a different criteria. 11.55%. Yeah, that's going to be a better one. So you can see here 11.55%, and it was still a positive year of 3.19%. Let me just check that that's correct. Yeah, so the maximum fall was 11.55% when the seasonal pattern was still profitable. So that told me that if price moves beyond 11.55% to the downside, it's never been a profitable year over the last 15 years. If I wanted to extend it out over 25 years, I could extend it out there. But 15 years was enough for me. Could look at that. And there was my criteria, 11.55%. So that meant my stock could be based upon seasonality. And I could look at this area here, and I could see, okay, I've got this bullish piercing pattern, and just sat under that, that's about the same distance stop that I would need of that 11% seasonality. So that for me was the perfect trigger to go long. Then, once I had my stop and my entry sorted, what I could see was that silver had this very strong period in June to September. Now, I wish I could say I had the confidence to hold through this period. Unfortunately, just like I did in 2020, I took profit far too soon. But my learning point, and if I'd used seasonality, this could have helped me, is I was taking profit far too soon just as the strongest seasonal pattern was coming into play. Average return 7.34%, 66.67%. So when you're looking at these seasonal trade ideas, you can take a look at the whole seasonality pattern, and that can help you with stop placements, entry. It could also have helped you time your exits much better. Also notice that in the seasonal pattern, you tend to see a weak period from September through to November, but not every year, right? You can still see positive gains, right? And even though the seasonality was negative in those periods, when you've got a strong macro trend, you could have just trailed stops as you've gone. But either way, what Seasonax helps you is to validate your trade ideas, to find your stop placement, to help work out where you should be taking profit, when to potentially let trades run, and that overall big picture is something that I find incredibly helpful for me when I'm looking at my trades, and I hope that you will find it helpful too.